you say you want this to be a global holiday and that you want up to 50% of revenue to come from international. What's the timeline for that? When does that happen?
Well, we are prepared for 10 years. Everything we do, we have a 10 years plan since the first day. When we started the year 2003 for Taobao and 2003-4 for the Alipay, we say we always judge how much we should do, what we should do to realize our dream in 10 years. So our plan is that in 10 years, we will reach 50% of the revenues and money and the sales from outside China.
Now, you and I last spoke on IPO day, and it's been a bit of a roller coaster ride for the stock since, and now it's just barely above its IPO price. How do you explain this sort of love-hate relationship that investors have with Alibaba?
Well, whether they love me, they hate me, but we love them, right? So you cannot stop people hate you, cannot stop, but I think we cannot take care of the stock price in our way. We have to take care of the results, take care of customers, take care of the performance. This is what we care about. And because people don't like China's economy, they hate us. Because they don't like this, they hate us, which is fine. People will understand. Because we are a company, not last for a year. We want a company last 102 years. We finished the 16 years. We have 86 years to go to prove ourselves.
So you said today the Chinese economy faces a bumpy ride. Many internet companies will fail. What are you most concerned about?
Well, we're concerned about it's not a China company, because China economy good does not mean your economy will be good, right? If China company is bad, does not mean your company will be bad, because we grow when China's economy was a bad time, right? I mean, to our standard, because nobody cared, nobody believed the internet, we started to grow. So we think it's an opportunity for us when everybody worried. When everybody worried about China economy, worried about China, or about the global economy, we think it's the opportunity.
How bad is China's economy? Is this the end of Alibaba BABA stock? BABA stock has been doing nothing lately. That reverse head and shoulders patterns clearly didn't happen. Why? Is it because the fundamental reason of Chinese economy? Was last quarter's great earnings a one-time thing? How bad is China's economy? Is the market wrong about Alibaba stock? I will explain it all right after this.
How you like that? How you like that? Nah, look at you, now look at me. Look at you.
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. My button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you?
And the reason I bought it is that I believe that the Chinese government would come with a number of measures to inject liquidity into the environment to drive, similar to what we've done here, right? We're in a recession. They did that. The stock didn't react. This is more a portfolio move than a BABA move. I will be back in BABA. I think the news that's really driving it today is not necessarily that. It's that they're going to spin off one of their companies to do an IPO. There are 5 more of those to come. The stock was when I bought it was about 8 times earnings. That's why I bought it. This is a portfolio move. I'm well aware of all the risks of variable interest entities, but away from that, the other reason I sold it is Xi is off the rails. I mean, he's just going crazy, and he's getting rid of all his ministers. unstable there, and then they continue to circle Taiwan with planes. I don't see them invading necessarily, but if they blockade. So all those issues, I said, let me just step back, give my market view, and get out. But I will be back into it. There's just too much value there.
Really quick, I want to get over to Steve because he actually bought some Alibaba a few weeks ago, but you think there's appetite for a spinoff from Alibaba even after the IPO performances that we've seen over the last week or so?
Yeah, it's a spinoff in Hong Kong. It's not a spinoff in the U.S.
I understand.
So,
but I mean,
so when you own Alibaba, you don't own the assets. You own a revenue stream. That's the VIE. So you will see it. But there's a chance also they say, you know, to the U.S. shareholders, hey, screw you. We're going to give you local shares, you know, in China, in Hong Kong, and this won't exist anymore, this VIE. That's the nuclear thing. So, so a combination of reasons I've sold. I still think there's great value there. I still think it'll work out, just my portfolio positioning.
So Weiss believes, by the way, these are Weiss's words, that she's off the rails. See, you actually believe some of these restrictions are going to be very good for Alibaba, and it's making you feel a little bit more bullish about the stock.
Yeah, I mean, there's restrictions on businesses in China all the time, and they're increasing, whether it be Nike, whether it be Apple, whether it be today, they were talking about makeup restrictions going into China. But you have a company that is relatively cheap. We think this is a good way to play it, given all the political risks that Steve cited. They have a 50% market share, touching 70% of the population. Stock trades at 10 times at a discount to its long-term average and a 40% discount to the Chinese tech sector. So you have policy that's likely to be supportive as well. So we think it's kind of an inexpensive way to play it. You have that margin of safety, and that's how we're doing it.
Chinese e-commerce giants fail to reveal data again. Chinese top e-commerce giants both claim their Singles' Day sales were higher this year than in 2022. But analysts believe the holiday's fast-paced growth has now started to slow in another sign of an overall struggle for the country's economy. China's top two online retailers, Alibaba Group Holding and JD.com, Inc., both said sales were up compared to last year's November 11th shopping holiday, during which the country's e-commerce companies offer major discounts on millions of products in what has been likened to be a huge version of Cyber Monday. But both firms also held back from giving full data on the sales they achieved during the 2023 11/11 campaign for a second straight year. Last year marked the first time details were withheld in the shopping holiday's 15-year history. The event, also known as 11/11, which first started out as a bachelor's day for men to celebrate being single, is now known for frenzied shopping sprees that start at the end of October and finish in mid-November. Ironically, Singles' Day celebrations have also come to be associated with couples too. Chinese retail analyst Xintun estimated this year's Singles' Day sales increased by 2.08% year-on-year to $156 billion, in what would be a significant slowdown compared to the double-digit sales growth achieved each year from 2009 until 2020. A small growth in sales for this year's Singles' Day would mean that China's consumption recovery is still a long way off. Alibaba reported positive year-on-year growth in gross merchandise value, number of orders, and participating merchants on its platforms, Taobao and Tmall. Without giving specifics, the company also said over 400 brands surpassed $13.7 million in gross merchandise value by midnight. November 11th, JD.com said that over 60 brands surpassed $137 million in transaction volume. In a more positive signal, China's State Post Bureau, the government agency that oversees the country's postal service, said 5.26 billion packages were delivered across the entirety of the 11-day-long shopping holiday, marking a 23.22% increase compared to 2022. A youth joblessness crisis could also be weighing on spending. Most consumers, especially younger ones, those that are more tempted by impulse purchases, have been affected by a labor market that is quite weak. Erica Tay, Director of Macro Research for Maybank, says unemployment among those aged 16 to 24 hit a record high of 21% in June, the last month on record before China's Statistics Bureau stopped using the measure. Around 77% of Chinese consumers were planning to spend the same or less this Singles' Day compared to the previous years. The firm said the underlying trend this year was a flight to value among consumers. Tay added that online retailers have tried to match a more austere mood among consumers, offering more discounts in the lead up to this year's Singles' Day. Consumers are now more goal-oriented and less impulse-driven, she suggests. Shoppers know what they want out of Singles' Day and don't want to buy much beyond that. This year's holiday was, however, marked by a focus on low prices that saw all of China's top e-commerce platforms put affordability at the center, amid fierce competition between retailers, in a sign that Chinese consumers are seeking to cut back on spending. Tay predicts China's sale numbers will increase over the course of next year, but no single event is going to produce the big bounce that many are hoping for. Tepid consumer sentiment will stick around amid uncertainty in the housing and labor markets. A survey of 3,000 Singles' Day participants carried out by Bain & Corporation also showed just 23% of Chinese consumers plan to spend more in 2023 than the year before, compared to 24% in 2022 and 51% in 2021, in a sign that enthusiasm about shopping spree is declining. The Double 11 event has been held for 15 years now, and consumers expressed a growing disinterest in this type of consumer event. Alpha value analyst Cheryl Zhang said, "The rise of new, more price-focused players, including that of PDD Holding, has aimed to capture market shares in China Tier 3 and 4 cities by letting consumers band together to bulk buy products in order to lower their costs. That has also heightened competition." Bain & Co.'s survey showed consumers in China's lower-tier cities were more cost-conscious than those in the country's wealthier Tier 1 and 2 cities, such as Beijing and Shanghai, particularly among younger people. The slower growth in Singles' Day sales comes as the shopping holiday's popularity seems to have plateaued in recent years, with Sintan data showing sales increased by just 2.9% in 2022. Alibaba, meanwhile, saw its Singles' Day sales increase 8.5% in 2021 and 85% in 2020. That the holiday may be losing its magic may be taken as more evidence of a China slowdown. In the wake of lockdown and against the backdrop of a worsening crisis in the property market that threatens to leak out into the wider economy. The Chinese macroeconomic headwinds that are making consumers more value conscious have been well publicized, including the slowdown in the country's previous strong GDP growth, relative weakness in consumer confidence, and concerns over the property market, Bain & Corporation said in reference to its survey. Those macro pressures, which prevail despite China's full reopening from lockdown restrictions earlier this year, are reflected in the findings of our annual pre-Singles' Day survey of 3,000 Chinese shoppers. As for Alibaba stock, they're clearly focusing on AI. Because they can't change the economy, but they can invest more and focus more on AI. Even though China is in a recession, I still believe in Alibaba because it has a huge cash pile. But eventually, the economy is going to come out of the recession. It is during these uncertain times that we need to embrace all of the changes and how we can take advantage of them on a more positive note. There's always sunshine in behind the clouds, and if you really pay attention, you have more opportunity in certain times than in other times. And if you look for the weakness and the clouds, instead of focusing on the sunshine, you'll miss those opportunities to take advantage of the market in these uncertain times. And I hope you've enjoyed my video today. I thank you for watching. Have a great day. Bye.